Ladies and gentlemen of the crypto space, we're live on a Thursday, October 28th at 12:06 p.m. Interesting title for the stream as things are starting to go relatively parabolic. We're going to take a look at, I don't even want to look at ES anymore. That thing is just straight up. What a ridiculous chart. The S&P, NASDAQ. Ay, 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 ay. Albeit, it looks like I agree with Raul and his tech. The way he sees tech like he sees crypto. And he called it the exponential age. And everything else just falls to the sidelines as compared to tech and crypto. And it's a fascinating observation that he had from a macro perspective. There's a couple of things that I'm interested today. I want to talk about a couple of high level things, but like obviously 2018 versus 2020. But I'm not buying anything lately. Everything's up. Why would I want to buy something that's up? I don't want to buy something that's up. I don't want it. I don't. If I got it so much lower, why would I even compound necessarily? I'm not compounding things. Albeit, I'm finding myself more and more tantalized about what's occurring with Ampleforth, which is very interesting. While people chase like ohm forks, where they pile into even just clean, was it Klima? Ohm and time still. I'm not interested in them. I'm not interested at all in Shiba, albeit, was it bone and steak? Is it bone and steak? I'm actually interested a little bit. It takes a lot for me to be interested enough to allocate capital, but point being, they're potentially productive assets. Now, clearly, SHIB is completely useless. It's meaningless to me. Now, a lot of what folks would say, like, people are salty for not being in. Yeah, that's not the sentiment that I have for saying that. I'm saying it from a productive asset standpoint. It's a useless asset. It does nothing meaningful. It's worthless. That doesn't mean you couldn't have made a fortune with it. Great. I don't care about making a fortune. I care about having a story to tell. And there's no story at all that, oh, I bought SHIB and it made me a fortune. Yeah, that's a fucking shitty story. You might as well have said you went to the casino and you gambled. Fucking, it was a stupid story. No, but if you have a story about an asset that pays you, that's productive, and you saw something that had a ridiculously awesome monetary policy, it was like the curve story. It went from hyperinflation to disinflation to deflationary. That's a story to tell. It's a sophisticated story that's a technical observation of monetary policy, and the whole notion of monetary policy is novel compared to 2018. There was no monetary policy in 2018, nothing that wasn't relatively trivial. It was all inflationary monetary policy. Staking's inflationary. You know what's novel? Avalanche, which is technically disinflationary, which has a Bitcoin monetary policy. There's a max supply, transaction fees are all burned, and it's emissions. It has emissions, decaying emissions. So that's a disinflationary monetary policy technically because it has a max supply. Well, suffice it to say, the market's ridiculously different compared to 17 and 18. We got some serious asymmetric appreciation. That's obviously a commonality between this market compared to historic markets. But the assets are completely different, entirely different. So I'm absolutely fascinated by the notion of productive assets. There's nothing like this in 2018. So if you're investing in like something, dare we say like an old school UTXO asset, Dash, whatever, what have you. If it's just an inflationary monetary policy or even really a disinflationary monetary policy, um, I'm not impressed. And I expect it to go straight up and straight down, just like it did in 2018, because there's nothing different. Unless it's something different, it's going to do the exact same thing. Let's pop it over to the main screen and take a peek at some stuff that just tickles me pink. Let's do some commentary as well. Alex, a pleasure. First things first, Ask Fizz is on fire. Hopefully, I'm helping with the Ask Fizz. I know you guys are also asking a lot of technical stuff. I try my best. Some of it I can't really answer. I don't have answers to, and I'm not going to answer questions about like what's a better investment because I don't know. No one knows. You only know if you buy asset A or asset B and you chose asset B and asset B goes up 10 times as much. You only know in hindsight if something's a better investment. So no one knows if something's a better investment until you watch the market. The market tells you. The only thing that could tell you what's the better investment is the market. And you only know in hindsight. So food for thought with regard to how I tone and phrase some of my answers. I try my best. And I also try and keep it short and brief as compared to my long-winded rants that I give you guys on the stream. Charlie, activate the like button. 25 people in the stream, 13 likes. We can do better. Henry, any pointers to the financial concepts that are covered? Hard to grab onto the big idea being presented. Realvision.com. Follow Real Vision. You have to get a sense of macroeconomics, central bank monetary policy, inflation, deflation, velocity. You probably want to dig into the bond folks, Stephen Van Meter, Jeff Schneider. Brent Johnson isn't really a bond guy. I actually find his approach very interesting. He's just an asset manager, and he understands, and I agree with him entirely. In many regards, an opportunist and a contrarian thinker, but he placed his chips very well, and I think he's going to do very well in the next 5 to 10 years. I think he has a good understanding of where capital flow will flow in forex markets. It's pretty obvious, and even equity markets for that matter. And that's what I think is playing out from an ES and an S&P and Nasdaq perspective. I think he's spot on with regard to the best of the worst. And the least shit fiat currency is going to outperform the dollar, and the least shit equities markets are going to outperform U.S. equities markets. And obviously, the crypto space is just going to outperform because it's the best place for capital. It's innovative, novel, and moving in the right direction. Let's keep it going. Charlie G, love that intro. It's pretty good today. Pretty good today. Crypto bets in the house. That's right. Professor J, good afternoon. A pleasure. Lewis is in the house. Spell-based pair stablecoin. Can you elaborate on why this is orders of magnitude positive according to others? It's massive. I think it's underrepresented to be a stablecoin base pair. You got to remember, U.S. government wants, hegemony. They want the world to operate on dollars, and that's why they're going to try and force. Basically, they have the euro dollar within a U.S. regulatory regime because everything goes through the banking systems, and that's all regulated to high heavens. So it's all regulated. Even euro dollars go through somewhat of a regulatory regime, SWIFT and settlements and banking, and so on and so forth. Point being, that's why they're forcing USDC and USDT within the regulatory regime to preserve hegemony. Where the U.S. is in, or U.S. policymakers are in uncharted territory, is with stablecoins that are outside, basically regulatory purview. What the heck are they going to do about not really die, because die as well ultimately if they get their collateral straightened out. What the heck are they going to do about MIM, UST, and Frax, and a couple of others if you make an Ethereum collateralized stablecoin? And there's a couple. You could do a lot. You could do a lot with regard to stablecoins. But what do you do with a stablecoin that's collateralized? That's not by necessarily really regulatable assets like Ethereum and Bitcoin. They fall under regulation of CFTC as a commodity, but it's not like they go through a settlement, a centralized settlement infrastructure. This is all uncharted territory in so many regards. And what's fascinating to me, I like to think about this in the context of free banking, where banks used to issue their own notes, their credit notes. This is like that, but on steroids, like on a whole nother level. What's going on right now is nothing compared to anything in history. This is nothing like the euro dollar. This all has to do, interestingly, with a currency shortage. It's two things: a currency shortage absent yields in legacy finance and the complete negligence of legacy finance to innovate at all with regard to uh, financial technology. So that this is the evolution of that. This is basically a release valve of technological innovation, financial technology, a currency shortage, where now you could create currency using other forms of collateral, because it just says what it is. Brent Johnson could elaborate further. Currency shortage and what happens, and it's going to drive capital into the U.S. dollar, and it'll drive capital into the crypto space as well, because the opportunities here. This is outperforming capital flows from underperforming to outperforming markets. Um, and also, people want more dollars. So how do you do that? You use assets to collateralize dollar positions. So they want to grow. They want leverage, and that's quite fascinating. What do we have up? We have the curve chart. This looks ridiculous. It's at 525. So we waited. Let's zoom out for a second. Let's talk technicals for a couple minutes. Look at that on the weekly. We waited a year and change. No, not a year, but we waited a year, October, end of October. Can you believe that, boys and girls? We sat on our hands, those of us, for an entire year talking about Curve. And now in a week, it's gone from $3 to basically, we never saw it at this price at 5 and change. Back at the end of DeFi in April of this year, when it was hot at 4 and change, that was just like a blow off top. And we never really saw this price back in August of last year. This is like a blip on the radar when it was first launching, and it was just collapsing under hyperinflation. You never saw that price. So seeing it at this price, knowing that this is where the churn is going to be, and it's going to it's in price discovery, it's going to keep appreciating from here. It's a fascinating time. Absolutely fascinating for us that have been in this since 30, 40, 50 cents. We took entry back here. Probably have VE curve positions. That's a position I have. Watched all this play out. What this red line right here on the weekly was the Bitcoin derivatives collapse, Bitcoin leverage implosion. And we watched stabilization, and we watched the trend formation, the triangular compression. And now we see what happens when you have a triangular compression and a massive breakout. This chart is so cool. I can't wait for this thing to be $7, $8, $9, $10. Or maybe if this thing literally just goes to where I think it's going to go over time is $30, $40, $50. Probably $30 in the short term. Not a 10x anymore, but a 10x from its breakout position, about $3. Let's see if it gets there this season, or at least this cycle, because everything operates in cycles. I don't think it's going to be the same type of cycle we had between 18 and 20, like 2 years worth of stagnation and depreciation. But we'll have our depreciative cycle. It's inevitable. We'll have our depreciative cycle. Question is, how far does it go down? And really, it's about macroeconomics, how far it's going to go down. 130% debt to GDP. I don't think it's going to go far down at all this time. So spell base pair is a big deal, Lewis, because that's money. It means MIM as a base pair, not spell, but MIM means any exchange that treats it as a denominator treats it as money. And money is a form of acceptance and belief, and the more exchanges that put it as a denominator, the more of a money it really is, a base pair. That's the deal. Igor, hey Noah, amazing to see this thesis playing out. That's right. Ooh, it's been very interesting thus far. See girl, good morning. Barry, good day from Netherlands. Pleasure. Crypto Bad Daniel just tweeted, and ICE is coming to Phantom. I expect it will. And ICE is going to be a money maker. That's a productive asset. Now, bear in mind, it's very expensive. How the hell do you get an entry? So this is Ampleforth. That's another story. ICE. USDT. Oh God. Yeah, it's completely useless on Poloniex, which surprised is even still in business. What a useless chart. I don't want to change this because ChartX takes forever to load. But ICE is obviously significantly appreciated. It was running at like $2, $3, $4 like a month ago. Very hard to get an entry. So this brings me back to part of what I've been talking about this whole week. It's impossible to get entries in markets that are up 1,000%, 5,000%. How do you get an entry in this stuff? So I'm not buying anything. I'm not DCAing. I'm not compounding. I'm not buying anything. There's one thing that I use with the cash. I have been buying Ample. There's nothing in the crypto space like it, in my opinion, right about now. Look at the price action. The price action is pretty much historically defined between a low of what, a half a penny. Point being, it's a low of it's around $1. So if it goes up 30% or if it goes down 50%, whoopee frickin' do. We've been dealing with that all year. 30% drops here and there, 50% drops here and there, even on Bitcoin. So a 50% drop isn't a big deal if you're dollar cost averaging. And if it goes up, you know it's going to come back down because that's how the monetary policy is designed to behave. Look at this price action. If it goes up, it's going to come back down. If it goes down, it's going to be pushed back up. So this is a great asset to DCA. The thing was, what were you supposed to do with it? If it was designed to be pushed up and down around $1, there was no purpose in holding it. But now, with a money market where people could capitalize on the yield or the rebase function to the tune of a couple 100% on a daily basis, let them. That's the thing. Us persons that aren't as savvy or want to do less work can exploit or capitalize on. People are borrowing at 183,000% interest because they can make more than that. And as a result, they give us a market where we could be passive investors, dollar cost accumulating, dollar cost averaging into Ample, reaping 80,000 plus percent yield on an asset that over time your yield is going to compensate for the volatility. So I put 20 grand in probably up here. Great, whoopee do. Let's see what it's at. All right, 16,800. I check back in a month. I'll be back at 20 grand. Happen to have 20 grand at the time. Maybe if I waited a little bit, it would have been a better entry and I'd just be up. I don't care if I'm up or down. I know where I'm going to be in 6 months' time, and that's all that matters. So that's pretty cool. So this is really the only thing I see that's interesting from a value allocation standpoint. I'm not in the market right now for like getting into a volatile asset. Okay, clearly this is a volatile asset, but it's a volatile asset that's designed to be pegged around $1. Designed to be. Target $1.061 price target. I'm not getting into a volatile asset that's not designed to be pegged around $1. Not getting into that shit right about now, boys and girls. You think like buying, I don't know, anything, ICE, Spell, Curve. I'm not buying any of that stuff. It's up vertically. Expected to go up more vertically, but it could equally crash pretty damn hard. Point is, I have no idea where it's going to go, and either does anyone. I'm not buying something that's not likely to go up. Let's take a look at the chart again. So we didn't know. We had faith that it was likely to go up because that's what a triangular compression is. That's what the chart told us, and it did. It broke out very aggressively. Let's take a look at Spell real quick because this thing is just massive. 2.3 cents. I think this is a heck of a base. This is a base like we have down here. 0.004 cents and lower. This triangular box is a heck of a base where a lot of people took entry. Meaning if a lot of people bought what was sold, they're not going to sell down here. They're looking for it to go up to sell up here. And why? And they'll do this. They'll sell when it comes up here and push the price down. And that's the way the staircase pattern unfolds. They wait for it to go up. So they're not selling. So in other words, there's an imbalance of buyers to sellers where there's more buyers than sellers. Less people are selling because they bought. And this is the base. Oh, this is going to be interesting to watch play out. Albeit, this is down here below, but that's actually what the TWAP indicates. Really, the TWAP was a good entry point. But how much further? I guess it has good upside. I myself think it'll go 10x from here. I'm not going to bet on it. I'm, I'm not deploying capital. It's hard for me to give advice with regard to entries because I'm so biased with such early entries in many assets. So I'm sorry about that, guys. I'm not going to be very useful. Gillis, some nice flowers, a pleasure. Peter, sexy at crypto bets. Bill Ross, thanks, Lewis. Yes, indeed. Koki, I love you using casino as the analogy of people buying Shiba type coins. Of course, it's a casino. There's no reason to hold it. The only purpose and function of Shiba, Doge, XRP right about now, probably not in the future, but is to sell it. It only has one function. It doesn't do anything. It doesn't give you governance rights. It doesn't give you uh, a revenue stream. It doesn't do anything for you. There's no purpose. There's no utility. There's no function. You get that? Killis, Real Vision is kick ass. Yes, it is. Got to understand macro to understand crypto. Does milkshake theory kick in next year? Yeah, I think it's already kicking in if you look at Forex a bit. I don't think it's going to go straight up. It's going you'll see it. And it's happening with the equities markets. If you look at the equities markets around the world, that's kind of, the equity milkshake. Same principle. If the China's getting shit on and the U.S. actually looks strong, it's because capital is flowing. Might not be flowing through public regulated channels because they got a lot of capital controls over there, but it's probably flowing through back channels and other means of getting capital around. So capital is going to flow from shit fiat to less shit fiat, from shit equities markets to less shit equities markets, and it's going to flow into tech, as Raul talks about with the exponential aids. Tech is just going to go into exponentially higher. And what's the epitome of tech is financial tech with real yields. There's no yields in legacy finance. There's real yields, real positive yields in the crypto space. So that's where the capital is going to flow. The vast majority of capital will flow into crypto. A huge amount of capital is going to flow into tech. But what do you think the purpose of a Tesla share is? The only thing you can do with it is sell it. It's a stupid investment. It's a stupid asset. And I'm the guy with the Teslas in the garage. But who the hell's buying their shares? It's stupid. Now, if it paid you 10%, great. There you go. Now it's a productive asset. But for now, it's useless. Luke, are you going to do any major shifts in your portfolio when the market shifts bear? Currently, no, but I'd like to carve out a good stablecoin position. As Warren Buffett does, he likes to build a war chest so he can buy people's fear. And I'd like that. I'd like to build a war chest so when people are scared and selling their stuff, I could buy it from them. That's what I'd like. That's what I'd like to do. I'd like to be prepared for the bearishness. And then building a war chest, I don't have to do anything. I have productive assets cranking out returns. I just got to sit on my hands for a couple of months and save up some capital. Lewis, welcome, Bill. Booster, Captain, I'll admit I'm regretting not keeping my pile of Shiba. Would have been life-changing money now. Just feel a bit bad that I buy things that I think have real value while shitcoins go 10x. Yeah, that's okay. I understand the sentiment. I wouldn't think about it too much. For me, it's about Thanksgiving dinner and having a good story to tell. And I didn't make as much money. I sure as hell am not going to make as much money as other people. But I've done quite well with a good story to tell. And the last thing my stream is really designed to do is designed to make anyone a lot of money. My stream's designed to give people a good story to tell. What are we at right about now? 3-1. For folks that have been on the stream, they remember this at 6. I didn't buy much CVX CRV. It's about the same, but it's up. And I have a good story to tell. And I didn't have to buy SHIB. This was nothing. All of this was nothing. I started crypto in March of 2020 with 120 grand. Well, that was my cost basis for basically COVID crash, where Bitcoin was 3 grand. Bitcoin was 3 grand in March of 2020. That was crazy. So I didn't buy SHIB. I didn't buy Doge, and I sure as hell didn't make as much money as I possibly could have. I didn't take the risks. I know a lot of people that took many more risks than me. They made a lot more money than me. And that's okay. Don't have to take maximum risk. Wow. This weekly chart's absolutely incredible for Curve. 365 days. Look at that. That's crazy. 1 year. And it was just printing higher lows the entire time. That's an incredible chart. Booze, just feeling bad about spending time doing homework to choose fundamentals over shitcoin while being kick-ass. Yeah, shitcoins do 100x. Yeah, but as I just said, it doesn't give you a good story. And I don't know if there's any good things right about now. All you can really do is DCA, in my opinion. And probably the coolest thing to dollar cost average into is Ampleforth, and nobody's talking about it. Folks are talking about all this crazy shit. Meanwhile, here's a relative stablecoin or a coin that's designed to be relatively stable in price that's cranking out 85,000% returns. And there's thus far, there's indication that these yields are going to persist. These yields are based on a debt market, a money market, lending and borrowing. People are borrowing because they can make more. Uh, they can make more, and that they're padding. They're making 400% on dollar stables every couple of days, couple 100%. Unknown. But point being, they're outperforming the shit out of 182,000% annualized APY. But I don't I choose not to. I want to take the passive side of that trade. They're taking the active side of that trade. So this is a very interesting asset. I mean, just looking at the historic price says it's been stable and relatively stable in price. Obviously, blow off top, but you're talking about $4 down to $1. It's a 75% retrace. Whoopie fucking do. I mean, that's probably the biggest hurdle with the crypto space because legacy equities markets don't do 75% retraces, don't do 35% retraces. So the biggest thing that I'm completely not numb to, not innocuous, but adjusted to is 30, 40, 50% drops in value. Dare we pull up Spell? I mean, seriously, 30, 40, 50% drops in value. It's an 86% drop when Spell was launched, 69% the second rip and dip, 55% the third rip and dip. And there we go up here. Pretty sure we'll see some big numbers too. Price range 55%. And we're worried about what's it at? It's at $1.18. And maybe this goes to price range. Maybe the monetary policy puts it down to historic lows, like a 50%. It hits that and it finds support. Ooh, a 43% dip. Ooh, before it goes up again, because when it goes down there, the rebase function is going to dry up circulating supply. It's going to cut circulating supply in half. It'll push the price up. That's exactly what it's designed to do. Ooh, a 43% loss of money. Oh, I'm scared. I put 20 grand in and I got $16,800, cranking that 80,000% yield that people are paying me to borrow the asset. Absolutely incredible. Absolutely incredible. Franco FXS is getting the attention it deserves. CVX FXS captain. Am I dreaming? That'd be crazy. That'd be really appreciative for FXS, being that it's deflationary in most regards. Justin, what's your opinion on the governance token fourth unknown? Good bar. With what rationale could you continue to hold SHIB? Zero. At some point, you take profits. Zero rationale. There is zero rationale to hold it. It is pure gambling. And take profits means you're selling it to someone else. You're getting rid of it. You will not have it anymore, which is a fascinating thing. Means it could go up and then you lose that money. It could go down and you're like, oh my God, I sold before it crashed. What a useless asset. The only function it has is to sell it. Completely useless. Reality is you sell long before now because you're probably a large. I am the rational actor, and I wouldn't have made any money with SHIB because I wouldn't have bought it in the first place, but that's okay. The only function it has to sell is to sell it to some schmuck that'll buy it for more than you bought it for. That's some shit. That's a fucked up market. The only function it has is to sell it to some schmuck that will buy it from you for more than you bought it for. That's a fucked up market. Quantified. I checked Aave this morning and there was 1 mil ample available for borrow. I thought, oh shit, bye bye. It's all been slurped. Yep. Look at that. 7 mil, 2,000, it's all gone. And look at that yield, 8,000, 85,900%. Isn't that interesting, quantified? So let the market tell you the behavior. If the yield drops and the APY drops, that means something we got to dig in. What's happening with the market? Is there something we don't understand about the narrative, the thesis at play? But obviously, people are borrowing to justify this kind of debt obligation. They're making money, and we're able to make money passively. That means something. Powder Monkey, my man, will this come down close to target of 106? Probably. Are you going to wait? Okay, that sounds good. Do you have to wait? No, because 86,000% interest means I don't care if it goes down to 80 cents. It'll come back to $1. This is the type of thing you just DCA into over the next 2 years. And you watch it go up and down, up and down, up and down, up and down until you get all dizzy and shit. And meanwhile, you're making 86,000% interest. I don't care if it goes up or down. DCA. Powder Monkey DCA on spell. All right. By the time you get a good position, it might be 50 cents. I have no idea. It's very hard to assess. I'm sorry, I don't have any good advice with regard to spell. There's my positions down there at the bottom circle. So I'm completely biased. Sorry, guys. Clearly, I love the asset, and I think it goes much higher, but taking an entry now is extremely risky. All you need is the macroeconomic environment to shit itself, and you get a retrace to the 100 SMA in the daily, and you're down at a half a penny. 0.005. But functionally, from a productive asset standpoint, there's a reason why I predominantly only have two assets. 90% of my portfolio is six assets, and 90% of the six assets is spell and curve at this point. I have no interest in realizing the capital gains. They're completely unrealized capital gains for a productive asset that pays me. I'm not paying the government 30% of my hard earned money for seeing this down here. I'm not paying them that money. I'm not going to realize these capital gains. They're out of their fucking mind. I'll take those realized capital gains to the grave. Same with Curve. Sweat, maybe even more so with Curve. You know how much talking I did to figure this shit out to get to where we are right now? That was a whole lot of rationality, a whole lot of learning on real vision, understanding macroeconomics, watching two ridiculous cycles play out, a period of irrational exuberance leading into about September of 2020, where this thing just went vertically down. It was going vertically down for 2 months, September 2020, and then basically nothing until January of 21. And shit got hot in January 21. And then you had everything blow up with Bitcoin. And then everything stabilized, and finally, we are where we are. You think I'm going to realize these capital gains and give 30% of the money as protection money to the federal government? That's crazy. Anyway, that's a complete digression and a total tangent, but isn't that the truth? Isn't that some brutal honesty, boys and girls? Crypto Henry, what do you think about leveraged yield farming with stablecoin pairs? Awesome sauce. Isn't that awesome sauce? Uh, Watch, take like an 80% leverage position, loan to value. I wouldn't go up to 90, 95. You would expect some fluctuation in stable coins. We could probably even see some stable coins come significantly off peg, 75 cents, 70, 65 cents. Who knows? It's speculative how far off peg they come, but it's not impossible. It's totally possible. Tyler's in the house. A pleasure, my friend. Pleasure. I free. It seems that the expected long-term high price of Spell is only in the cents. Is that correct? Unknown. Unknown. It could go many ways. Maybe MIM is adopted by a country. I have no idea. It's all speculative. What is high? Where's it going to go? Is it going to go to 8 cents and then you're going to sell it? Then you don't have it anymore. So this comes back to the original conversation that I try and focus on is what's the point of assets? What's the point of an asset that doesn't pay you money? What's the point of an asset that's designed for only one purpose, to sell it? Avoid such assets. And you really have to reorient your mentality, reprogram yourself. What is an asset? I only want to own assets I never have to sell. Never, ever, 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 ever. Never, ever have to sell an asset. Interesting topic. Made it to the stream, Tyler. It's a pleasure. Powder Monkey, 200 Gwei trades, keeping from buying ample at Spell right now. 200 Gwei a day. Keeps the trades away. Dan, hi Noah. Do you have any thoughts regarding gaming and play to earn? Yeah, Gods Unchained is the only thing that really catches my fancy right about now. Predominantly because I have an old school deck. Basically, from a Magic the Gathering perspective, I got an old school Type 1 deck. Yeah. Old school Gods Unchained. Captain Weber's in the house. It's a pleasure, my friend. Keep me posted. We'll work a little bit more when I got some time on that stuff you got cooking. Tyler, where would you build your stablecoin war chest? Anchor? Uh, yeah, UST, MEM, Frax. I wouldn't mess around with USDC and USDT from a savings perspective. There's no reason you can't use USDC and USDT. I just don't. It's interesting from a narrative perspective. I don't have a concrete narrative about whether you should hold them or not. I don't think we're there with regard to capital controls, but I think we are there with regard to an opportunity. I think the biggest opportunity in the crypto space is stablecoins, which basically means, UST, MEM, and Frax, which is FXS, Spell, and Luna. Interesting, huh? Um, Asarco, last couple of questions. I'm going to wrap it up for today. Thank you, Noah, for the stories you tell. It really helped me see through the madness. That's the whole point. Is peer through the madness, and you actually see meaningful financial primitives and systems here. What's sad is that when I said the normies, I'm in crypto. Uh, what's sad is that when I say to normies, I'm in crypto, they assume it's SHIB and Doge. Well, you could imagine for the people that are in SHIB and Doge, at least they're in garbage. But then you got the people that have no idea, like, oh my God, you're playing crypto? You own SHIB? Those are the people that are completely left out. And that is sad to the normies that are completely out of the loop and have no skin in the game whatsoever. That is sad, my friend. Talman, you taught me the guppies. Now, what is the TWAP? Time weighted average. So it's pretty good. It's actually, I'm finding it more useful than even the short term moving averages. So, I mean, this thing's just vertical at this point, curve. So look at the time weighted. Look, it lines up with the 50 SMA. No, it's the 10 SMA right there. See? See I find it as a good average because it's above the 10. If it's below, look, it's below the 10 SMA, it's below the TWAP. So it's just another moving average, my friend. But I find it useful. Look, if it breaks below the TWAP, excuse me, it found some nice resistance. Breaks above the TWAP, it's pretty good. Some people use the VWAP, volume weighted average price. I like the TWAP. Just another indicator that may be potentially useful. Mihaly, Noah, thank you for your stories. What do you think about Terra? Terra's cool. Terra's cool. Uh, Raul, hello. Hi. Tyler, do you use that with Aave deposit? Well, if you're doing anything, I'm pretty sure you're referring to Ampleforth. You gotta deposit it. It doesn't do anything if you're lending it. The whole point of it is to lend it so people pay you to borrow it. That's the whole position. Having Ample does nothing unto itself. It's the money flow and the capital churn opportunity. It's not just holding the asset. You got to lend it to people, and people want to borrow it from you, and they're borrowing it from you for a very high premium because they're able to make more than that ultra high premium, which is quite fascinating. Z Girl, can you walk us through the steps to stake Ample? Yes, you go to aave.com. You could click on markets. You click on Ample. You press the deposit button in the top right, and that's it. And you deposit Ample. Gas prices are going to be pretty expensive. You 414. You're probably looking at like $200, $300 transaction fees on a day like today, or at a gas price like that. Very expensive. Um, Hilda, hey Noah, my man, nice to catch you live last day. Oh, very busy lately. It's always a pleasure. Um, if you have any questions, I'll hit up AskVid. I know you've been asking stuff on there. It's a pleasure to help out the best I can. Bear in mind, guys, I see, a lot of people take a liking to the assets I talk about, and the point of the stories I tell isn't to endorse an asset or encourage the purchase of an asset. But, if you're going to buy Ampleforth, if you're making $1,000 a week in your salary from a job, you take 20 bucks, 50 bucks. That's what DCA is. DCA doesn't mean to take $20,000 that you've somehow saved up in a bank account and buy just Ampleforth. That's not what DCA means. It means take 50 bucks out of $1,000 paycheck and you DCA into an asset. Doesn't mean ape into something. So just give you guys some context and how I think about these things. Alpha, is that APY for supplying stables or Ample? That's APY for supplying Ample because people can make more money borrowing it than the 187,000%. Matic is going, ooh, good for Matic in the Indian narrative. I think it's a big deal over the coming 5 to 10 years. How do you calculate your withdrawal of yield from SPEL? I don't know. I haven't even tried to withdraw it. I just watched the chart and I figured I'd look back in a couple of years when it's 50 cents and I'll be very happy. Um, Ample rebases give me a 12-inch of one, half-inch of the other vibe. Their rebases give you the exact same vault spike and stock split. Yeah, more or less. But it's a split and a reverse split, a split, reverse split, split, reverse split. So that's basically what a rebase does. But when you're lending, you don't have the asset anymore. So you're not part of the split, reverse split. You understand? Only the borrower who has the asset, who has it, is experiencing that split, reverse split. You're lending 1,000. You have 1,000. You're owed 1,000. You see? And that presents the opportunity for borrowers. If a borrower owes 1,000 Ample and has a positive rebase where they instantaneously have 2,000 Ample, after the rebase, they get pay back their debt and they have 100% profit. So that's how someone who's on the other side, the borrowing side, takes advantage of the Ample rebase. And me personally, I like the lending side better. I don't want to have to sit in front of the computer, wait for the rebase to buy and sell. Albeit that sounds nice, it sounds very lucrative, and I'd be willing to pay 187,000% interest to borrow an asset for a couple of hours. But I'd rather be on the passive side and just collect the interest. That's me personally. I got to wrap up the stream, boys and girls. I got some things I got to get to. Thursday, October 28th, 12:51 p.m. As always, thank everyone for joining. Tell everyone to subscribe. After party on Discord. Hit me up on AskFit. I'll help out the best I can. And I'll catch you all tomorrow. See you then. Peace.